Good morning, everybody. It's Chris here from Serene Education with the four majors analysis update for the 30th of September 2011. Sorry, guys, time's flying. Yeah, beautiful Friday morning here in Wales. Fantastic weather outside for a autumn day. I thought I was in South Africa for the past 3 days. It's actually been typical South African winter weather. But yeah, let's move on. We are talking about the currencies this morning, not South African weather. Four majors. Using our CTC strategy template, I'm looking at the euro against US dollar, daily chart here, and very, very interesting setup. We know that we can see a lot of indecision going into this period here. Yesterday we got news that Germany approved further funding or bailout funding for Eurozone. I'm a bit surprised at that, but it came out quite a winner. I was expecting a lot of people to actually stamp their feet and actually go against it, but I suppose they're the ones who got the most to lose if we had to see a default in Greece. But yeah, a majority winner out there in terms of votes, and we saw price revert to the upside quite sharply for a while, but I think market sentiment overall is just still looking very bearish. I think that they still know that things are still going to go pear shape. I think we're still going to see potentially long term. There's still a slowdown. There's still loads of other things that dictate, just throwing money at the market. Yes, it will give you a bit of stability, but would it prove to be the ultimate turnaround? I doubt it. I think sentiment-wise, a lot of big money out there that's been traded just doesn't see. I mean, where's it coming from? How are they going to come up with this funding? It's just crazy, and a lot of people are scratching their heads. So yeah, not really favorable. Yesterday, in particular, the night before, I actually got triggered into this particular trade on a 4-hour. I've just gone ahead and put all the lines in. I was actually back here looking for the break of 28 shooting stars. I had price ceiling level, resistance level. Yeah, a lot of shooting stars, indecision wicks at a prior resistance level and downtrend. We had a higher swing, and then we had this breakout here on Sunday evening, the candle, and I thought, wow, this is bearish sentiment here. Even though the CTC on this time frame is not giving me the signal to go short, the lower ones had the hourly 30-minute. So I jumped in, just got triggered, and price went straight against me. But I'm still in it. My stop is above the 1370-200 mark, and still looking, well, still in this trade, and pretty apprehensive yesterday. We saw a large move to the upside, and then I think market sentiment just grabbed hold of it and said, hey, we should be still be trading lower. There's just nothing out there that really is favoring anything for the upside on the euro. So, well, besides all the money being thrown at it, I think everybody's quite aware, or well aware, that that's not really going to sort out any issues. It might, in terms of psychological 10-minute boost, confidence boost, but reality kicks in, and I think we've seen it reattempt the lows again. So we had a bounce here. We are testing the prior swing, or low here, which happened to be prior resistance here, and as long as we can close below that level, so if we can get below the 1350-400 mark during the course of this morning's open on the European session, then look to see further downside movement for at least the 13,400 mark as our first target. Very, very important for this pair. So yeah, there you have it. Price on the hourly chart pretty much back down. We've seen lower swings going into this dictating. Let's see that nice pullback, the continuation. So the break of that, the pullback, and 100% and 161 below them. So if we can break below 1350-200, if you're trading this, then ultimately you could look at those particular points along the way as potential targets. But looking roughly at around about 133600 as our all-time low if we break below the 1350-200, and it's trading below the moving averages, and our CTCs in our favor. So shorting opportunities, 15 minutes giving us a bit of an indecision candle, but that's doing it exactly because we're getting close to this price support that we saw a couple of hours ago. You can see the clear swing lows dictating price action on this time frame. So we've had a full-on break, pullback, and then breakout, breakout, pullback continuation, and then a further pullback. That pullback now has failed to go higher here at the prior one, so you can see how we're putting this all together. Got to break below that 1350-200 before we see any further indication of further downside movement. So bide your time, wait for a definite break below that level to see further gain to the downside. If that fails to materialize and we see another bounce here at the 1352 or 1350-200 mark, look for price to break and close above the prior resistance here, which in this case is the 1355. What do we got here? 1350, yeah, 57, 58 mark before we see any further. Still trading below the institution moving average. Until it's doing that, it's still bearish. Next up is sterling. Let's have a look. Sterling on the daily. Here again, also in this one, you're wondering where the hell am I getting all this from? But yeah, in this one, here again, same thing happened. All the indicators are there for further downside on this particular pair. Yes, major trend has been breached and stuff like that, but we still haven't broken above this 1556, the 156500 mark, which happens to be a very strong support and resistance level here. CTC is still negative for this pair, moving average all above us. It's the same case here. A lot. This is another one that got me into it. Look at this. Price of support, new resistance, and then we had this. It's just crazy. This one really is. So shooting star, spinning top, spinning top, shooting star, spinning top, bearish engulfing. That's the one that triggered me in. There again, this is a 4-hour CTC. You can see the moving averages. Yes, I know for the first time we are trading above the 50-period moving average on this downtrend. And yes, I know we have broken the trend line. Well aware of that. We could see a potential bounce here, but that's definitely a shorting opportunity. If you look at the higher swings here, being breached, swing high, swing high, swing high. Just typical looking at plain old simple support and resistance levels here to give me my entries. Candlesticks in order to give me this exhaustion here. A lot of indecision. Wanted a decision candle, got it. So hourly and 30-minute gave me that, and then entered at the bottom of the candle. Then we had that, and then almost like a morning star set up, and then price reverted to the upside. However, like its European counterpart, pretty much reattested the price support and resistance levels here at 156500, closed higher. CTC was in favor, but ideally anybody getting in there wouldn't have actually looked for a long, ideally until they've actually broken above the 157500, because there's quite a lot of consolidation here. It would have been far better to wait and then and look for a break above that to get you a clear signal of support and resistance higher at 5900. That didn't materialize. We had another shooting star, and price reverted to the downside, and that's where we are now. So price is steadily been making its move back down again to the prior swing, and we're not too far off here at 155600 mark. And CTC yet again on this is very indecisive. You can see a lot of indecision creeping in here after a lot of decision. So very bearish for a while, now very indecisive. So that's showing on our hourly. There we go. We look at those areas, price support and resistance. Institution moving average on this time frame is still acting in support level. We have a bit of support and resistance below us, so it does need to get below all that before we see further continuation to the downside. CTC has just turned red, so everything's looking favorable for further downside movement. So you can either say, well, I'm not going to trade this band with it. Look at it, it's so indecisive, very erratic going into here compared to what it was before. Very, we had more red, now we're seeing a bit more blue, but very indecisive. You can see a lot of red popping up here and there with fake outs, etc. Want to see a very decisive trend direction. That's the reason why you see better chart breakouts on your hour and 4 hour. Hence the reason why they all trade the 4 hour and hourly charts institutionally wise. So got to see moving averages trading by the small ones, but still have the institution moving average, lower swings going into this trading hour. Got to see a break below that 5500 mark to see any further downside movements. You can see here on the 30 minutes, well extended lower swings going into this. You can see lower swing, lower swing, lower swing, and there's that 15 as I mentioned. We got to get below that. Have to. There's lots of price support and resistance level here on the daily. as I mentioned, or sorry, on the 4 hour, even particularly on the 4 hour, there a lot of indecision around that area. So it's got to be breaking below that. See further downside movement. And that's funny enough where I was triggered. So I'm actually pretty much back to where I entered. So not too much of a loss. That's trading for you. You got to take your winners with your losers, or your losers with your winners. Put it that way. Apologies. But yeah, it's looking bearish at the moment now. So look for ultimately entry levels along the way. Make sure if you're following the rules of the CTC to back it up with strong sound money management. Next up is the US dollar Swiss franc. Good old Swissy. Let's have a look and see what's happening out here. Again, we've also seen a slight pullback, very consolidative after that massive intervention that we saw earlier on in the month. And price has been running since, pretty much heading higher. A lot of support and resistance here at the 9200 mark. We are now testing a price support and resistance level that broke out not too far ago. So price has to stay above these levels. So go with the 89.50 for argument's sake. Keep it to a round number. CTC is still in our favor. We are seeing consolidation against trends, trading above the institution moving average, and as long as it's doing that, then on a daily, it's pretty much looking bullish because it's above that institution moving average for one reason. So intraday, put that 89.50 in. Okay, oops, apologies. Hit the wrong button there. So yeah, as long as it can stay above that area there, then we can expect it just to bounce higher. Seeing lower swings, lower swing, lower swing, lower swing. We have a breach of that lower swing, so price has reverted to the upside. However, it's failed to break above the prior resistance level here. That you're seeing consolidatively at the 89.90. What's that? 89. Apologies, guys. I'll get there in the end. Yeah, the 900 mark. Okay, so got to be trading above the 900. CTC is still blue. However, we have two parts of the CTC red. So indecision at the moment. Now we need to see blue arrow and blue arrow candles on that particular time frame. We are seeing that on our hourly. Okay, put in that's 900 mark. It's got to be above that. It's got to get above that in order to see further progression higher. Failed to do so, we'd obviously see it just testing the prior resistance and failing to break high again, and we should see price revert to the downside. Okay, so you can see how price is still trading with this institution moving average. Higher swings going into this time frame. Got to get above 900, guys. Failing to get above 900, we'll see resistance here and price revert to the downside. So got to break nice with a bullish up candle, something like that. And then just have a look at your other strategy templates to give you further indication of the if it was a clear signal, like relative strength, for example. Have a look and see if that's giving you a positive outcome. So look for further upside movement if it can close above 900. If it fails to, then look for obviously further downside movement as we go into this consolidation here. You can see we've been here before, failed. Could we see a failure here and revert to the downside? Last pair of the day is US dollar Japanese yen. Let's have a look. Here again, yet again, more consolidation. I think we're going to end up doing the same thing it did back here in the 80s again. Just bouncing along here, merrily biding its time. But the most important thing is we're getting quite close to this resistance level here at the 50 period moving average. This is a daily time frame. Notice that we've had 3 consecutive days now of seeding level at the 80 mark. Look at that. Resistance, resistance, resistance. Trade higher, but it failed to close higher. We had resistance previously here too. So a lot of resistance support around this area, and the 50 period moving average is moving in above us. So are we going to see price fall lower? Asian market session has been trading lower since the close last night in the US session. European session is taking over as we speak, and is driving slightly lower too. So CTC is still very negative over here. We're seeing consolidation on the upside. You have to look at, yeah, there we go. Institution moving average right there in front of it, right there above us. So that's pretty much keeping it, holding it down. We are seeing higher swings going into this. So what's going to give? Are we going to see a break to the upside? If so, it's got to be quite a bullish one. Otherwise, what we can see is just price falling over, and then we'll see a reattempt of the lows here at the 76.10. We've been in before. There's no reason why we don't have to be there again soon. Institution moving average is still above us, still dictating price action. We are seeing higher swings. The US dollar has gained strength. The US dollar index has been very, very strong with us. That doesn't has been probably reflected here, as you see, as prices making higher swings. We've got to be trading above 76.80, and a nice bullish engulfing candle would be fantastic. Look at all these wicks here. You don't want to be caught in all this, so rather bide your time. Look for it's far better to look for especially when you're seeing a lot of consolidation on certain pairs. It's far better to look for a decent up candle, down candle on, say, an hourly or 4-hour chart, especially a 4-hour, because hourlies and 30s can really trigger you in here only for price to go against you. But then you must use your other templates that we've taught you. There are other strategy templates out there that are going to give you further indication if it is a genuine breakout or not. So use them. So once you do get a breakout, just confirm using your other templates to see if it's a genuine breakout, and then look at your support and resistance levels. Break higher, we'd look at 76.80 ultimately as your target going forward. Break lower, well, 76.10, there's nothing below that. It can continue to zero. So factor that into your trading, guys. Very, very important. Okay, so got to see a definite break. You can trade from now. If you find support on lower time frames, they're all showing red at the moment. We have seen a bounce though. So let's have a look over here. We know on hourly we have higher swings. That's dictating price. So we see a bounce now. It's happening. We have an up candle. That's got to materialize now. So if we can stay above 76.60, in this case, got to get above here. Then ultimately we look at 76.80, which is a bit too close for words, but then need to be trending above that to see further extensions higher. So this is where patience becomes a key. Failure to find to bounce here like it's done before, and a break below the institution moving average here at 76.40, then definitely look at further extensions lower to the 76.10. That's it, guys. Hope you have a fantastic weekend with family and friends. Let's hope the weather stays like it is for the remainder of the weekend, so we can enjoy this great weather. But I hope you had a fantastic week of trading. If you have made losses, please let me know. You know where to email me, and then I'll get back to you. But learn from these mistakes. People only move forward if they actually see where they've gone wrong and they implement changes to their trading in order to rectify that. We've seen so many people in the past who failed to do anything with it. They go, great, I've lost, and then just move on and keep making the stupid mistakes going forward. So make a mistake, address it, factor it into your next trading, into your next trade, so you don't do it again. And that's the only way you're going to go learn going forward. But other than that, if you have made profits this week, well done, congratulations. Keep it simple, manage it properly with sound money management rules. You cannot go wrong. You'll come out with more winners and losers, and that's exactly what we want to do or have as a trader. We want to have more probability in our favor, and we want to be trade consistently. Small gains consistently makes for a profitable trader and a happy trader. So have a fantastic weekend again, and I'll see you on Monday. Trade serenely.